Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. Tomorrow is Fed Day. They're still expected to hike rates on about a 70% probability, though it's dissipated, actually stuck its nose now. I think that probability is about 69 or so. But we were as high as 80% a few weeks back. The dollar index is showing that. It's been weaker on the week. To the downside, it has bounced on the session, but it's running into a trend line that's broken. But that the soul of that trend line, I guess you could say, is still there. From that September low, it's been a lot of support building and holding that dollar index up. So you got a lot of support all the way from about 96.5 down to 95.5. What we're going to need to see is a close below 95.5 in the dollar index tomorrow, or really, if it does happen tomorrow, to follow through and happen on a weekly basis. To really signal that this dollar can roll over. To the upside, the levels are there. I mean, you got the March contract, which is lower, but the highs back on the December contract, that 97.5, 97.70, 97.80 is the retracement. You look at back in May of last year where the market broke down, that 97.5 is huge. If this dollar goes higher and then it stays up there by 97.5, you got to watch out for the dollar breaking out. We don't think that's going to be the case. We think the Fed needs to bubble wrap any hike with the dovish rhetoric, but ultimately there's some saying that they shouldn't hike at all, and really we're beginning to believe that's a small possibility. Now we're not going to count that as likely yet, but be ready for anything tomorrow. It's going to move these markets. The euro was higher early overnight. Poor German business climate data overall started to roll that over, and it supported the dollar on the flip side. But where we're seeing resistance in the euro on the FX rundown last night, we have it on there. Check out that major 3-star resistance level. We need to get a close above there to really break this consolidated downtrend. Check that out. And then for the yen did spike up a little bit overnight, but it's fallen back from that level. We have that resistance. There's a major 3-star resistance level for the yen. Know that level tomorrow if the yen gets going. But for the yen, you want to be careful with is if the Fed is dovish and they support equity markets, the dollar may sell off, but the yen may not be the place to capitalize on that, as equity markets could rally as well. But where you could look is risk-on sentiment in the commodity currencies. What is holding very well is that Aussie dollar. Though the RBA minutes from their most recent meeting last night sort of were, downbeat, I guess you could say, but that was expected. Overall, the global risk sentiment has carried over, around the world to diminish growth figures. But the Aussie has been a bright spot because there's hope on trade. Even today, they're saying that the U.S. and China officials will talk in January. So the Aussie is holding against some support. The fallout, as we discussed yesterday, on the technical basis is very poor. But if the dollar weakens, the U.S. dollar weakens, and the Aussie is able to hold, this could be a good place to look to capitalize on. A place that we don't trust is the Canadian dollar. Canadian dollar finished lower again today as crude oil is at 46.5, down about $3.50, and it got torched. But you got an EIA report tomorrow. Keep an eye on that. But as well, manufacturing sales for Canada, they were negative today. So Canadian dollar is not a place to look, but the Aussie dollar would be. Give us a call. We're here to help navigate. We're going to be watching the Fed ahead of and after. Don't hesitate to call our trade desk, 312-278-0500. You can email us info@bluelinefutures.com. You can check our website for updates, and you can sign up for a free trial of our research there. But remember, futures trading involves substantial risk of loss. Is not suitable for all investors. Thank you.